What's going on, guys? In today's video I'm going to be going over a high win rate ICT trading strategy called the unicorn model. Be sure to stay tuned till the end of the video as I'll be going over a chart example on the NAS 100 charts. Let's get started. So to be able to understand this strategy, you'll need to know what a fair value gap is and what a breaker block is. So pretty much a breaker block is, okay, by the way, this is a bearish breaker block, as we're going to be going over a bearish breaker block example. So it's when price creates a high, then the lower low, and then it creates a higher high, and then we break that lower low, and that last candle closure becomes our breaker block. Now, and breaker block is pretty much a failed order block. So price was supposed to continue moving towards the upside, however that order block failed and turned into a breaker block. Now, I'm sure most of you guys are aware of what a fair value gap is. It's a 3 candlestick pattern when one wick doesn't overlap the other wick and the middle becomes a fair value gap or unbalanced price, where price retraces to move towards the upside or the opposite towards the downside. So we went over what a breaker block is, we went over what a fair value gap is, and to be able to trade the unicorn model is pretty much when a breaker block overlaps a fair value gap. So let's say, for example, this is the breaker block, and obviously this is the model example, so I can't really show you if it is a fair value gap. So let's assume this is our fair value gap somewhere around here. You can see this is the breaker block. I'll just name that a breaker block, so breaker block. So this is our breaker block, and that white box right here is our fair value gap. Fair value gap, there we go. Now when our breaker block overlaps with our fair value gap, that becomes a high confluence trade. So what we would do is set our short positions at the start of the breaker block or at the start of the fair value gap, or you could put it towards the end of the fair value gap right here. You would put your stop loss, let's say at this high, and you would then wait for price to retrace back into this level. So let's say price goes ahead and does this and it taps into our zone, and what we would do then is target this low, and we would pretty much wait for price to play out and hit our TP level. So I'll be now going over a live example on the NAS 100 chart. Now just before I do, our team was able to make $10,000 this month using our AI trading bot. You can see right here, $10,841 paid out, completely hands-free using our AI trading bot. And you can see our wise payout right here, £8,004.73. Now this is in the pounds, so obviously after the conversion rate it becomes £8,004, which converts to $10,000. So if you are interested in getting access to the trading bot, message us below, join our free Telegram channel. You can see everything being documented, and if you want to book in a Zoom call with us, one of our team members will run you through everything you need to know about the trading bot and to see if that's something you're interested in. It's a completely free call, 30 minutes with one of our team members. Now we'll be moving over to the NAS 100 live chart example. Let's move on. We are now on the live example on NAS 100. Let's get started. So the first thing I can spot is a high right here, and now we're waiting for a low to be created. So let's see what happens. And the low gets made right here. Now what we're waiting for is price to either wick above and then it can start to go down, or it can close above as well, no problem. So let's see what happens. Okay, price is going up, and as you guys can see, we had price wick above and close below, and then we had a massive candle towards the downside which broke the lower low, which confirms we have a breaker block. So I'm going to mark out the breaker block. The breaker block is the last low candle before the lower low occurs. So this would be our breaker block right here, and then what we can spot is a fair value gap right here. So I'm just going to change the colors so it's a bit more clear. So our fair value gap is in yellow and our breaker block is in orange. Now as you guys can see, they do overlap, so what we would then do is put our entry position down and then we can take the trade. So I would get my short position, put it at the end of the breaker block, so it's within the fair value gap as well. Our stop loss would be at this high. You can also put it at this high, and then we would target a simple 1 to 2, or you can target different areas in the market such as a low. So I'm going to target a low, so let's go ahead and target this low down here. I'll just close it to the body. There we go, and that's a 1 to 2.5 risk to reward. Let's see what happens. I'm just going to speed it up and let's see what happens. So right now we've tapped in, this breaker block has been respected so far. We've tapped into the fair value gap and we've tapped into the breaker block. Let's see what happens. I'm just going to extend the PNL and let's see how this trade plays out. And we've dumped quite a bit, and as you guys can see, we have hit TP, we wicked below it. So yeah, pretty much this is the unicorn model, and the reason it works so well is because there's a lot of confluences involved, such as market structure shift, we got fair value gap, we got breaker block. Like I said again, a breaker block is a failed order block, which makes it a very high confluence that the market is shifting towards the downside, as this is a bearish breaker block. So yeah, I would recommend every single one of you guys try out the unicorn model and let me know what you think. Backtest it and let me know down in the comment section. And once again, if you are interested in our AI trading bot, link is below. You can join our Telegram for completely free and check the results for yourself. Thanks for watching.